And there are things that happen to us along the way, experiences that we have that prevent us from working through the mental block of acting, of doing those things that we know we ought to do. And so what I want you to think about is, what is there that you know you need to do, that you want to do this, but for some reason or another, you've been holding back. For some reason or another, you just have not been able to gather your nerves or be able to work through the procrastinating or putting it off or justifying or blaming. Some reason or another, you just haven't done it. And you know you ought to do this. You really want to do this, but you don't know why you haven't done it. Anybody know what I'm talking about? Raise your hand, please. Okay, then I got company here this evening. I'm not talking to myself. Now, first off, we know that this is not easy. Because in order to begin to reinvent your life, you've got to make a conscious, deliberate, determined effort. That you really got to put all of yourself into it. It's very challenging to act, to do those things. There are times when you're looking at it and you say, I know I need to do this, but I don't feel like it. I don't want to do it. I know I need to do it, yet leave me alone. No. I don't want to do it. So what do? What are those things that cause us to do like that?
All right. What's up, everybody? Just hopping on. About to get this thing rolling right now. I'm about to, my man JP in the building. What's up, JP? Let's see what's going on. All right. So we about to get this thing started. It's your boy Trav here repping Trends University. We about to get this thing rocking and rolling. I want to talk about some vocabulary today. Okay, that's what I want to talk about today. Some trade the trends vocabulary. I'm going to be specific to pairs, pips, and lots. Okay, pairs, pips, and lots. And basically, I just want to make sure everybody can get more in tune with understanding some of the things when they're watching me, they're watching us. And also, this is a great, insight on beginner level, information. So this is about to be sweet because we about to get it popping right now. I mean, pips, pairs, and lots, hopefully, after this quick time around, everybody is in tune with some more information, just understanding exactly where I'm coming from. With all this stuff, right? So just want to make sure everybody is on point and just waiting for everybody to get on real quick. Just waiting. Just about to see. All right, just put the last thing in the group chat real quick, just making sure everybody hopping on the call. I know a lot of people have been asking and waiting about the call. See, what am I talking about? All right, so about to get this thing started right now. All right, just hold on, responding, make sure they got the link. All right, so let's continue. Pips, pairs, and some lots. That's what we're about to go talking about right now, which is about to be cool mo breeze. All right, let's get into it. All right, so first let's start talking about what is a currency pair, right? And basically what these currency pairs allow us to do is they allow us to make money going up or down. Okay, so no matter what's going on, I can either buy or I can sell. I can put in buy stops, sell stops. So currency pair, you got a base and a quote in every pair. For example, you see EUR USD. So the base is euro and the quote is USD. Okay, and the base plus quote equals a currency pair. Okay, so for example, if you see euro USD, if you put a sell in on this pair, this means I'm selling the euro and buying the dollar. Okay, selling the euro, buying the dollar. In other terms, meaning I'm betting per se, or having a real educated guess is that the exchange rate for euro to dollars is going down, right? That's selling a euro. So you're saying basically the value of euros is going to be less in euros to get more dollars, okay? And when you're buying the euro and selling a dollar, that means you're going to need more euros to buy less dollars, okay? Whereas you are selling a euro, meaning you need less euros to buy more dollars. And buying a euro is that you need more euros to buy less dollars, you know, so basically the opposite, you know. Of course, hopefully that makes sense, you know, going into it. And of course, if you need more in-depth for all the newbies and beginners that's in the Trends University, if you go through your IML Academy basics, you'll also get the detailed version of going into the base quote, currency pairs, and also going over other currency pairs such as the GBP USD, Great Britain pound, Japanese yen, the Swiss franc, what else? Let me see, the Swiss franc, Japanese yen, the New Zealand dollar, the Canadian dollar, the Australian dollar, you know, a whole lot of different pairs, you know, that are traded, you know, on this market, and a lot more pairs. You know, people trade oil as well, gold. The pair for gold is XAU USD. That's the pair for gold versus the US dollar. So the value of gold in dollars can fluctuate, it can go up or down, right? So as you know, the value of gold, you know, in dollars has always increased, right? 20 years ago, an ounce would have been $20, whereas an ounce today is worth $2,000 US dollars. So the price does fluctuate, of course, so you can trade that as well. Now let's talk about the PIP, right? The PIP is a very small measure of change in a currency pair in the forex market. This is usually, you know, the fourth decimal place from the right for US dollar related pairs. So let's now look up at the Euro USD. This is a US dollar related pair. So the PIP is going to be from 3500 to 3501. That means that pair moved 1 pip. That was a 1 pip rise, okay? And pairs with USD JPY, any JPY pairs, the pip is actually the second decimal point to the right of the decimal point. So as you can see here, 98.90 to 98.91 equals 1 pip rise. Make sense, right? This is, you know, short, sweet, you know, kind of to the point. If anybody have questions, feel free to stop and ask. That is not a problem, okay? So this is a pip. This is how we make money. We make money based on we found our currency pair, as you can see, Euro USD, and I want to know if it's going to move up 1 pip. So that really means, let's say, example, the exchange rate from euro to US dollars is 135. I'm gonna need 1.35 euros to buy $1. That's basically what I'm saying, right? But the number is so long, it goes down and there's decimal points, as you can see, you know, the continuation of the number. So it's going to cost 1.3500 to get 1 USD, okay? But now if the price goes up, so now it's going to cost me 1.3501 euro to get 1 USD. That's a price increase, and that was 1 pip rise. Okay, now let's go back to the Japanese yen pairs. Now 98.90 went up to 98.91, right? And I bought at 98.90. Now it went up 1 at 98.91. That's a 1 pip rise. So now this is when you realize how pips can pay the bills, right? Because you can actually risk a certain amount per pip, right? So let's think about the 1 pip, and I'll explain to you my 10 pips and dip understanding, right? So there are some cases you can actually utilize what is called a nano lot. So you can actually trade a penny per pip. Certain brokers may still allow this, but majority of brokers now only allow micro, mini, and standard lots. So because majority of the brokers that you're probably going to use in forex, crypto, or what have you, have micro, mini, and standard. I'm just going to talk about those three, okay? So a micro lot basically has a volume of 0.01, which means 1 pip equals 10 cents, okay? So for example, that trade that had 1 pip rise, you risk, you put in a 10 cents bid, right? And guess what? It went up 1 pip, so you've gained 10 cents. Simple as that. You risk 10 cents per pip. So but that also means if it went the other way, 1 pip, you'd have been negative 10 cents. Okay, same sense. Now let's go to the mini lot. The mini lot volume is 0.1, which 1 pip now equals $1. Okay, so you risk $1 per pip. Okay, so once it goes up 1 pip, you've just made $1. Okay, but that again goes for the same thing, the opposite direction. If it goes back or down 1 pip, you now have lost $1. Okay, so that's why you risk 1 to 3% of your account. So for example, if your account is a $100 account or even $300 or less, I would say you want to be looking at the volume at 0.01 at 10 cents per pip, because you can now risk about 30 pips per trade and only max out about $3, right? 3% of your account keeps you in the game. So now if you have $1 and we're risking 30 pips, that's going to be about $30. So you actually want to have about what? $3,000, right? To start, with proper conservative risk management, I would say about maybe, $3,000, right? Because now you're risking, $30 per pip. I mean, $30, per trade, right? Those $30 could add up. So you want to make sure you have about a $3,000 account. Okay. Now, one standard lot. This is where money gets serious. This is when you probably want to have about $10,000 plus with proper risk management when you're doing per trade, because now you're risking $10 per pip. As you can see, the higher risk you go, the higher reward, because you can risk what, $300, right? Back 30 pips. I can risk $300, because if it goes the right way, 30 pips, I have made $300. You see what I'm saying? In certain cases, we're looking for 50 to 60 to sometimes 70 pips. That could be, 10, could be $3, $5, $7. It could be $30, $50, $70, or $300, $500, and $700 based on, of course, your risk management. If you only got $300, trade 10 cents a pip, 0.01. If you got about $1,000 to $3,000, you can possibly use a mini lot, which is a volume of 0.1, which is $1 per pip risk. Okay. And then if you have about $5,000 to $10,000, I would say you can, start at a risk level, possibly a standard lot. Okay. At $10 per pip, high risk, high reward. Okay. So one thing, we was listening to Les Brown starting this off. One thing I like to talk about is motivation. A lot of people say, hey, I want to get involved in investing. I want to get involved in trading, Travis. A lot of things that I talk about is like, it's all small talk until you start putting in the work. Okay. Because want shows up in conversation, but expectations show up in behavior. It's so many people can just be out here talking, and never put anything into action. And a lot of times now it's all about that action, boss. So, I want to make sure, you got to take it upon yourself to go to the next level. If you want to take your finances to another level, hey, what do you have to do, right? What you got to do is take your actions to another level. That's point blank, period. Getting into the moves. We got to make sure we get into the moves. All right, so anybody on the line got any comments, questions, concerns? See my man hosting out here. Cool. I am going to continue, because next, what I did want to talk about was proper risk management. And proper risk management, a lot of times, people, always want the high rewards, real quick rewards. I want that quick money. I want to make $10,000, $15,000. I'm like, all right, when you want to make it, man, can I make it in a month? All right, then I asked, what's your, initial investment? They were like $100. I'm like, what? That doesn't make sense. right? $100 and 10,000 to 10,000 in 30 days. I mean, that's really highly unlikely, because that means you're leveraging. It can be possible, but you're going to be risking or leveraging a lot more borrowed money, right, from the brokers, right? Leverage. That's called leverage. Okay, it's another vocabulary I should have put in here. Leverage. So basically, that means for every, $1, you could basically risk $500, right? You have the volume, so you can put in on $100 account. You could put in a volume at 0.10, and risk $1 per pip, even though that's beyond proper risk management, right? And you're making real high risk reward type stuff real frequently. All right. So what I want to bring out now is this customizable daily growth plan. Okay. And this is going to break it down for us real quick, like how I like to, say risking 1 to 3%, a day. Keep it real conservative, taking his time, Excel, pulling up. But I'm about to show y'all this proper risk management. Cool. So, like I said, let's look at $1,000 account. And a lot of times I like to tell people you start out with 500, which means, you can, pay for the, the right courses that you need, the right software, the right scanners that's going to help you, that's top in the game right now. And we got them. I just want to put that out there. Everything you need, we got it. Top in the world, Craig. Right? All the best educators and trainers in the world, Craig. All right, so $300 account, right? And you're looking at doing about 1 to 3% risk, as you guys can see, 0.01, right? We're using 0.01s for a while, okay? 0.01s for a while. So basically, just looking at a $300 account, like I said, this is initially started off at a total of a $500 investment, okay? You get the training, you get the education, all the vocabulary that you need. You can come back and revisit, rewatch it, actually do live trainings that's going to be available to you, around the clock. We have over 20, trainers right now in forex, crypto, binary options, and basically you name it, right? Trading desk, like I said, crypto exchanges, forex, gold, oil, US 30, anything you name, we have experts and trainers that do live trainings on this stuff. Like I said, it's only going to cost you $200. Come on, right? And now you're going to know how to actually make money from your money. So let's look at $300. We're risking 15 to 20 pips. Stop loss at 10 cents. That's, like I said, $1.50 to $2, right? So I'm risking basically $2 max to get $6, right? And that gives me a 2% gain. Some people say, man, 2%, man, that's not a lot. All right, but let's think about it. Let's think about if we do what we call compound interest. So now you got $306, right? Because you at 306, okay? Day 2, right? 2%, you're still risking. Stop loss, 15 to 20, but you need 48 pips, right? Boom. Guess what? Now I got I just profited $6.12 that day. Now my account goes from 306 to 312. That alone, guys, from 3 to get 4%, to increase your account 4%. Guys, if you do this in a month, do you know you winning? Guys, and I'm trying to teach you how to do this per day. You see what I'm saying? 2% per day. Where else can you go and learn a skill or get access to being able to have something that can make you 2% per day? Just 2%. I ain't even talking about nothing crazy. 2%. Just a little old 2%, and slowly but surely. That's why people look at me and they see the withdrawals of $1,000, $2,000. Hey, guess what? Just 2%. Sometimes it's 2% a day will get you there in 2-3 months. You know what I'm saying? Sometimes 6 months, depending on what you start with. And I'm going to show you that in a second. Okay. Now let's look at after 7 trading days, that 2% per day. After 7 days, I'm at 344. 14 days, I'm almost at $400. Okay. 30 trading days. I'm almost double my account at 543. 60 trading days. I'm 36 days, 600. 45 days, 731. 60 trading days, 965, guys. From $300 to almost $1,000. And 60 trading days, 60 trading days usually takes about a span of 3 to 3.5 months. That's because there's no trading on the weekends because the market's closed at 4 p.m. on Friday and open at 4 p.m. on Sunday. All right. And a lot of times because of Friday and Sunday's volatility, me personally, I only trade Monday, Tuesday, Wednesday, and Thursday. So that's 4 days, right? So I really got 4-day weeks. Okay. So that's why 60 trading days usually just cost 3 months or 3.5 months. Think about it. Would it be worth it to learn a skill set that you can trade and learn a skill that you can take $300 to $1,000 in 3 months? In 3 months, right? And guess what? Go ahead, take 500 out, leave 500, right? So you take 500 profits, right? So guess what? You take 500 profits, you got house money, right? This house money you left now, because remember you started with 300. Well, overall 500, but you broke now that 500, your initial investment is paid, right? Because you paid the 200, right? Right? Because I'm gonna make sure I show you how to get it for free. You won't have to pay for it monthly. I'm gonna show you how to get it for free. So all this is just profit. Now, guess what? We're gonna go back to just 2%. Like I said, we're just gonna go back to 2%. $500, 2%. First day, I made $10. Day 2, I made another $10.20. Day 3, I made $10.40. And again, you see the lot sizes, right? We're gonna still keep it at 0.01 to 2025. That's $2 to $2.50. You see what I'm saying? Or $2.50 to $3. And we need 98 take profit. You see what I'm saying? Boom. Come on. So after 2 weeks, after $500, after 14 days of trade, I'm at $659. $160 profit in 14 trading days. 30 days, let's see. 30 days, I'm already back to about 900. 45 trading days, I'm at $1,200 at 2%, right? So now 60 days, my 3 months, I took 500 to 1,600, right? And you do what? You're going to take out that 608. Boom, profits on top of profits. I'm going to take out 608. That's what I would do, right? You do whatever you want to do, okay? It's up to you. Now I got $1,000 in there, 2%. Now 2%, that's $20 plus a day. So after 14 trading days, I'd have made $319 or $300. 14 trading days. 30 trading days, guess what? I'm at 1,800. 45 trading days, I'm at almost 2,400, over 2,400. 60 trading days, I done took 1,000 and tripled it, right? So guess what? Now I can take out 1,200. How much is that? Hold on. I got 3,200. I'm going to take out 12. That's going to leave me 2. I got 2 in the game, now 2%. But you get it. Guys, I ain't got to keep going. You see what I'm saying? That's why I slowly but surely, yes, it might have took me 6 to 8 months, but I took $300 to $2,500. You see what I'm saying? Just learning a skill. All right, learning a skill. Now I can, pay some extra. Get what I love really is to get ahead on bills for like 3 months in advance. Right. So now when the work paychecks come through, I'm looking like, bro, I'm getting paid again. I'm getting paid again. Like, come on, man. That's the type of stuff we want, y'all. That's the type of stuff we want. We all got to get right. We all got to get right, though. It's only right that we all get right. Blessings. It's only right that we all get right. So again, y'all, I appreciate y'all. Boom, coming on, checking me out, just seeing what I got going on. Said again, it's your boy Trav. We trading the trends. Let me stop this share. In that thing. We're just out here trading the trends, y'all. That's all I'm trying to do. Trade these trends. Shout out my man JP up here with me. You know what I'm saying? You got any questions, anything you want to add? But I just want to appreciate everybody who jumped on real quick. Well, I really broke it down for us. I want to see everybody at the top because you already know it's the bottom. That is way too